From powering factories, revolutionizing automation, to providing sustainable solutions across sectors, ABB India has done it all. Today, we're coming to you from their Maneja campus in Vadodara. We're here to see how it all happens and the vision of the company going forward. To understand just that, we're joined by the MD of ABB India, Mr. Sanjeev Sharma. Sanjeev, thank you so much for having us here and congratulations to you and your team. ABB India is now 75.
Vamakshi, you're most welcome, and we're very happy to have you here. We are standing in this plant in Maneja in Baroda, which was started in 1963, and our company was incorporated in 1949, exactly 75 years ago. So we are very happy to celebrate it together with you.
Well, absolutely, Sanjeev. 75 years of ABB India, and if I'm not wrong, you've spent somewhere around 30 years in the ABB group. So you've seen several capex cycles play out. So I'd just like to understand from you, what is the kind of capex cycle that is currently underway? How different is it as compared to the ones that we've seen before, and how many legs do we have for this capex cycle?
One thing I think I can say about the current cycle is it's very broad-based. I think we have not seen, especially in India, this kind of a broad-based economy, wherein earlier it used to be run by some business houses or industrial houses when they will put some capex in, but now it's much more broad-based. I would say 10-20 years ago, you will see about 8 to 10 market segments which used to be dominant. Now we see about 23-24 market segments which are quite relevant for our product portfolio.
Absolutely, and I just want to again, just for our understanding of our viewers, I'd also like to point out that in the union budget this time around, the growth in capex that we saw was somewhere around 10% as compared to FY25 estimates for FY26. Now, in the past, from FY21 to 24, the growth in government capex has been at a CAGR of almost 30%. So, I'd like to understand from you, is this an indication that the government is now getting ready to pass on the baton to private capex? Is that understanding correct? And in that case, can the growth rate and order inflow that we've seen for ABB India moderate a bit, or will private capex make up for most of it?
Given the construct we see in the marketplace, which has strong players both on the industrial side, infrastructure side, and of course some of it is aided by the government direct spend, I believe it's a very good mix. Now, on back of economy growing 6.5%, 6.7% every year, for last 5 years we have seen our orders book grow 22% CAGR. So that means there's a multiplier effect of what is happening underlying in the economy and what shows up in our books. So that's quite broad based. We have also seen the revenue has grown about 20% CAGR, and also the strength of the market and the premiumization of the economy is taking place. So we have seen our profitability also grow 3 times in last 4 years. So I would say correlating ourselves with directly with the government spend is not the right correlation we drive. What we see is what is happening on the broader economy, and which is quite robust. And we also find that the relevant customers and relevant customer segments have a fairly robust pipeline of projects that they want to execute. So we are quite optimistic about it.
All right, and the commentary so far around private capex has been that it is quite selective. But what are the trends that you are seeing on ground? And do you think that this selective sort of capex that we're seeing in the private sector could become more broad-based?
It is becoming broad-based, and we also see the number of factors which are causing it. Like for example, the fastest growing segments in the market are data center on back of digitization of everything, and also localization of data. We have electronics manufacturing, which is a big theme in the country. We are seeing quite a good growth in that area. Renewables is another one. So these are the segments which are leading, and if you go say 5-7 years back, these were not the segments which were the prime mover for our portfolio and also the market participation. So as far as the private sector is concerned, these investments are private. They are not led by the government, but they are led by the government policy. So we are finding that the policy framework which has been unleashed over years, that is causing new market segments to join in, and at the same time private capex is being spent there. Typically, I think in Indian market, people correlate with the capex is with the core sector. Yes, there are core sectors which are still muted. They are not expanding in the greenfield capacities, but in our portfolio, we see the existing players within the existing plants, they're expanding, and we take the benefit of it.
I also read a comment from your global CEO, Morten Virod, and he said that India is the number 5 market for ABB globally, and in the next 3 years, it could have the number 3 spot. So what are the kind of sectors that will drive this optimism that he shares with us, and also what will be the revenue as well as the order inflow run rate when India as a market becomes number 3 for ABB globally?
That's a clear projection by the global CEO and totally endorsed by me. We had a discussion when he was here. So group definitely sees India going in that direction. After US and China, India will be the number 3 market. And we see electrification, motion, which is all about energy efficiency, robotics automation, which is all about manufacturing and productivity, and process automation, which is always about the productivity and energy efficiency of the large infrastructure, large process plants. Those are the ones which will be the key focus areas for us.
I just wanted a bit more details about your order mix. Now, predominantly we've seen that ABB India has been a short cycle capex company, if I can call it that, but of late we're seeing that longer gestation projects have been inching up marginally, but they have been inching up. So I'd like to understand from you, typically what are the sectors that these long gestation projects do come from, and is it more temporary that their share has been increasing, or is it more structural in nature?
I would say it's more cyclic in nature.
Okay.
So at a fundamental level, our product portfolio, 75% of our orders come from fast moving industrial goods, which is basically MTO, MTS and ETO segment, where they made to order, made to stores and engineer to order. That's a 75% basket. And then we have a basket of about 12% which is in the services area, and rest of it comes in the projects. Now in the projects area, they come now and then. Like for example, we got a very large contract for the transportation, which is the mobility with the railways. It's a mobility project with the railways, wherein we are going to supply the key technologies. Where if you are visiting Switzerland, you see the trains running. So similar technologies which are used in those trains are brought by Indian Railways to build the modern carriages and modern passenger cars. So those technologies are supplied. So that comes as a large contract, and then we serve it over a period of time. But then that doesn't become repeatable every month or every quarter. But at the same time, you may have a participation from a metals plant, or for example from a chemical oil and gas plant, that they may place another large contract which may come in a certain quarter, but it doesn't repeat the following quarter and the other. So what happens is the large projects are now and then, but as far as the core business of products, that is a continuous business.
Sure. And just to understand about this differentiation a bit more, so what are the margin levels between the base orders, as you call it, and these long gestation projects? What is the difference in the working capital cycle like? And typically from what I understand from what you're saying, the revenue recognition for these projects is a little lumpy, right?
So as far as the product or the fast moving industrial goods is concerned, is the conversion rate is very high because it gets channelized into the market directly by us and also through our channel partners and the integrators. That purely reflects the strength of economy and the demand in the economy. So that's a good indicator there. But as for the large projects are concerned, typically it is the readiness of the customers to receive the equipment. So we work very closely with the customer, and we plan those deliveries as customer is willing to absorb that technology and make their final products. Yeah.
So the margins for long gestation projects will be slightly higher as compared to the base orders?
I would say as far as the the product business is concerned, that's something which has a direct relationship with the volumes you produce. So as long as we have the capacity utilization, that brings in the profitability. As far as the large gestation projects are concerned, they come with a fair margin, but then once we are brought in, how our supply chain management acts on it and how well we project manage and execute together with the customer, I think that determines the profitability that we finally realize in them.
And let's also talk about your margins, because they were the highlight of the numbers this time around. For calendar year 24, margins at 18.9%. This is very impressive because it is an expansion of almost 500 basis points for you. And definitely there are several factors that you outlined, there was product mix, internal cost efficiencies, etc. So I'd just like to understand from you, how much of this margin expansion that we've seen is sustainable, and do you see any more levers for upside from here on?
So as you execute and you continue to invest in productivity, localization and better supply chain management, and plus automation, so that you can produce more with less, and also train the manpower so that the repeatability is good, all these efficiencies show up. And of course, on top of it, when the volumes are good, capacity utilization also adds to it. So I think there are a number of triggers which cause it, and our intention is to participate meaningfully in the marketplace, but also maintain the same performance levels.
Sure. And earlier on you said that the customers are willing to pay for the kind of products that you offer. You even spoke about premiumization briefly in your conference call. So I'd just like to understand from you, what is the pricing power that you have across divisions? You have 4 divisions, so what is the kind of pricing power that you see out there? And I mean, technological moat is very important in the kind of business that you do. So what percentage of your business has a tech moat, and what portion of it has the tech that has been almost commoditized, if I can say that?
So it's never the pricing power, it is the willingness of the customer to pay. So we always depend upon the customer to recognize the technology which brings more value for them, and that's what we focus on, and that value has a price which the customer is willing to pay. So I find that this behavior especially has changed after the COVID, because customers now look for more reliable partners and the ones who can service them long term. And that's the sweet spot for ABB, because we have the global proven technologies and also a very well trained manpower locally, which really helps people and the customers to make sure that their plants are running and their uptime is better. So I think the premiumization is where the customer is expecting more from technology, because now the scales are rising in the country. So people don't want suboptimal product or optimal on the quality side of the product. They really want best in class, and there is a price associated to it.
So India is a big opportunity, right? Everyone is talking about it. Even your global CEO said that, given the opportunity that he's seeing in India, they're allocating more resources in terms of capex as well as R&D spends for you. So I'd just like to understand from you, what is the kind of capex as well as R&D that the global parent will route through you, and could you share with us what is your targeted R&D spend as a percentage of your sales and the headcount addition that will come as a result of this?
No, absolutely. I think as I said, we have 18 businesses in the country, and all the global managers who are responsible for those businesses, they're investing. They're investing in capacity and also in, in the product portfolio expansion and also localization of it. So that investment is ongoing and is showing up in our growth. And I think that's what our global CEO meant, that we will continue to invest and make sure India is ready for the growth. ABB India is ready for the India's growth as we forecast it. Now, when it comes to R&D, there are 2 types of R&D. One is the R&D which is built in the incremental product improvement at the local level. But then we have the global R&D center. We call it that global competence centers, which are here in India. We have about 3,000 technologists who are working there. And while he was visiting, he visited those. He is very clear that given the demographic as well as the talent available in India and a kind of work which is getting done on the broader base across the different R&D technologies and different product technologies. So it means that talent pool is available, and any work we want to get done for global products, more and more work will be done in India. And when it gets done in India, naturally there is a direct benefit to us, because we are also have access to those technologies.
Well, absolutely. And you mentioned about localization, right? So currently, is the localization level somewhere around 85%, if I'm not wrong?
Yes, it is, and some products are 100% localized,
Okay.
and some of them are 80%, 90%, some of them are 60%, especially in the area wherein the local supply chains are not set up. Like for example, power electronics is one area wherein we don't have the power electronics, equipment or the global manufacturers. We hope with the PLI schemes and various incentives made, these critical components are also manufactured in India and they become part of our local supply chain.
So 85%, can it become 95% when you're number 3 market globally?
We believe so. I think that's our intention. But at the same time, we need our global partners to also come here and set up their manufacturing base so the supply chains are much, much closer to us. But that's our intention because we have a very clear strategy at a global level, local for local, which we have learned out of our COVID period, wherein if the supply disruption takes place, yes, it can be a little bit of a issue to serve the customers. Though we managed it all right, but that's a threat. And also in the geopolitics scheme of things,
Absolutely.
more reliant you are in the market where you want to be present long term, local for local is our strategy.
So when you localize, does it also have a bearing on your royalty spends that you pay to the company? Does that come down?
Well, typically with the volume and as the technology gets normalized, it does. But at the same time, you also have to spend when you are bringing new technologies.
Absolutely.
Because the same equivalent technologies, if you have to develop grounds up, it costs much, much more money. And we are in an advantageous position that we can go to a global center and global expertise center and take this help and get this localization done much, much faster.
Correct. You spoke also about local for local, right? Just a short while ago. So that is a strategy that ABB follows globally. But my question to you is, can India be an exception? Because everyone is talking about India as a manufacturing hub. Of course, there's policy support. There's also the labor arbitrage that comes into picture. So I just like to understand from you, how would the exports look like? So would exports be a meaningful part of the revenue? It's somewhere around 10%. Can it be 25, 30%?
So exports are growing meaningfully at 15 to 20% rate, but percentage wise they are about 10 to 12% for the simple reason India is growing much faster. So Indian market is growing much faster and my prime focus is to develop Indian market and also develop these operations to world class level, and they are. So like for example, the plant where we are standing here where we make the machines, the large machines, though we may be at a consolidated basis maybe exporting 10-12%, but this plant exports its production to an extent of 35%.
Wow.
So what happens is business by business, the global leaders are recognizing the power of manufacturing in India, and they are allocating more and more markets to our Indian colleagues who are running the businesses, and we find that it's in early stage and it will continue to grow over a period of time.
Absolutely. And is there a split that you have in terms of exports? The exports that come in from the parent company as well as some other ABB entities, and some exports that you win directly. How are both of them trending, and what are the kind of markets that you can directly target?
So global markets are in the hands of our global division managers.
Absolutely.
So they are the ones who decide which production plant to use to bridge those markets with supplies. So increasingly they are using ABB in India, and other plants also we have globally. That will continue to be the case, but then definitely there is a positive bias for Indian manufacturing, because we don't not only have the labor arbitrage. My focus together with my colleagues is productivity arbitrage as well. So we don't not only have to make use of the labor arbitrage as it exists, but it goes away after some time, but it is our ability to create more productivity arbitrage using new technologies, new methods which are not used anywhere else in the world, to make sure that we are able to take benefit of it and also able to serve the markets from here.
Well, absolutely. And I just want to ask you one question about your cash, right? Your cash is at a massive 5,000 odd crores. Now it has been growing over the last couple of years. So you have mentioned that you are eyeing some inorganic opportunities. So I'd like to understand from you, is there anything in the works? And if so, is there a gap in your portfolio that you are trying to bridge? Would you look at parallel technologies? And again, if there is something that you are eyeing, is it only in the domestic market, that is here in India?
So as far as the cash is concerned, yes, we are a debt-free company and we have 5,400 crores of cash on our balance sheet. So, in February, when the board met, they have approved 51% more dividend to be distributed to the shareholders. So that's first recognition for our shareholders. The second is we are incrementally investing in the organic expansion of our capacity. So that's where the cash is getting utilized. We have a very strong backlog. So we need to continue to maintain certain inventory levels to serve that backlog. And finally, of course, in the inorganic side, we have a good pipeline, both global and a fairly good pipeline in India, wherein we have targets, which if we are able to kind of come up with a good framework so that the business benefits by acquiring those businesses, I think that is something in the process. But you see, to acquire a company, it requires two parties. So sometimes we could be ready, or sometimes the other party could be ready, but we need to just make sure that the timing is right for us to bring those assets within the company.
And one last question to you. So it's been 75 years of ABB, right, in India. Any quote or caption or headline that comes to your mind for the runway ahead for the next 75 years of ABB India?
The quote that comes to mind is कि right now what we have seen is only a trailer. Abhi movie baki hai.
Picture abhi baki hai. So that's the word coming in from Sanjeev Sharma of ABB India.